Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to ask the question, and I'd like you guys to jump in with your opinion. I want to ask the question: is Trump losing his touch, or is it more of the case of the market has now got bored of him? As well as that, I want to talk about the fact that maybe, just maybe, after all these months of talking about tariffs, maybe the market is beginning to shift its focus back to basics and back to economic data. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, then the risks at hand before entering any trade. With that out of the way, let's get started. So, yeah, we know what it's been like over the last couple of months, but it does really seem to me and to many analysts that maybe, just maybe, Trump is losing his touch or his power on impacting the market. Because today, President Trump, on his Truth Social little network, he posted a post which the market is almost ignoring. Whereas, in the past, it would really move the market. This is what he had to say. He said this in his little post: "Our deal with China is done, subject to a final approval with President Xi and me." Now, a month ago, the market would have lost its mind on this post. It would have gone like crazy. I mean, the market moved with almost every single trade-related update that the president had posted. But today's post, this post today, which a month ago the market would have gone mad for, is completely ignored. Completely ignored. Now, don't get me wrong. Okay? Like I say, I'm asking the question to you, first of all. Do you think the market is basically bored of what Trump says, or got used to what Trump says, or got used to the fact that he says one thing one day and the next day he'll do something else? Don't forget, the S&P had its best May last month, best May in 30 years, because of the taco trade. The taco trade. Those of you who don't know what the taco trade, please go back and watch one of my other broadcasts where I discuss the taco trade. So this is a question to you. Is the market simply getting bored of Trump's posts, or simply thinking he will say one thing, he'll say another, let's ignore it? Or is it changing its focus? This is up to you, people. Let me know what you think. Because let's face it, there is still a lot of confusion. There's still a lot of confusion. Okay, the market is still very confused with this whole trade policy thing. We hear one thing, we hear something else. Like just over the last 48 hours, for example, Trump has continued his threats. Okay, let's continue his threats. He said this: at a certain point, we are going to send out letters. I think you understand that, saying that this is the deal, you can take it or leave it. I mean, take it or leave it. And don't forget, obviously, we're approaching that 90-day deadline. The 9th of July is when the reciprocal tariffs are supposed to kick in. So he's saying at one point, I'm going to give you an offer you can't refuse. If you refuse it, then reciprocal tariffs on the 9th of July. There he is, done, dusted. That's what's going to happen. Meanwhile, U.S. Treasury Secretary Scott Bessent, He told Congress yesterday that it's highly likely that countries in trade negotiations with the US will see an extension of the 90-day tariff pause. So there is a total confusion. Again, like I say, is the market beginning to ignore what Trump says, knowing that he's likely to change his mind? Basically, like I said, don't forget the market's been trading on the taco trade for quite a while now because of that. It's made a lot of money on the taco trade. Or is it simply a case it's changing its focus? Because there's still so much confusion. But Trump saying this, Besant saying this changes, that changes. I mean, there is still a lot of confusion, which can still rattle the market. That's not going away. However, as well as I think we've got used to the antics, got used to the posts, got used to the twists and turns, and yes, we know that, yes, it can still affect the market in the big way, but we've also come to accept, at the end of the day, these tariffs is not going away. They're here to stay. So we've come to terms with that. So I tend to think the market is focusing on something else completely different. I think the market is going back to basics. It's turning back to economic data, like the good old days. Like I've been doing this type of program, this type of reporting now for many years. And I remember talking a lot about economic data, the importance of it. Over the last couple of months, that's all been pushed to one side. Instead, we've been talking about Trump and trade war and tariffs. But now I think the market is turning back to economic data. And I tell you why I think that. First of all, US CPI year on year, was announced yesterday at 2.4% versus 2.5% expected. So don't forget, there's been a lot of anticipation, a lot of nerves that we're going to see a rise in inflation because of tariffs. But again, the increase, it did increase because it was 2.3% previous, just so you know, but it was 2.4% versus the 2.5%, which the market was scared about. As well as that, another inflation data came out today, and that was the US Producer Price Index year on year. And that was announced at 3% versus 3.1% expected. As well as that, what also came out today, we had the initial claims, US initial claims, which came in at 248. The expectation of it being 248 or 240, actually, so slightly higher. But the other thing is the continuous jobless claims or the continued employment claims. And this is a number of people who are continuing to claim unemployment benefit, is actually at near a 4-year high. So here's the thing. Now, because of this, basically the market has got all eyes on one man and one man only. Now he is now looking like he's in the driving seat to drive the market, not Trump. Everybody's going to be now looking at the Fed and guessing when they're going to cut interest rates. Because here's the thing. The fact of the matter is inflation is cooling. The labor market is slowing, but it's not collapsing. Don't forget we had the NFP, which came in at 139 on Friday. The expectation was it to come in at 130. So slightly higher. It is cooling. It is slowing down, but it's not collapsing. So the big fears over the last couple of months, especially with these tariffs and this trade war, was that we're going to see unemployment and job market collapse, inflation rise, and we're going to face stagflation. And then with stagflation, obviously comes the fear that we're obviously going to potentially go into recession. Now, I talked about that several months ago. That's what the market was worried about. That seems to be disappearing. So instead, we're looking at economic data to guess where the Fed is going, because the fear of stagflation and the fear of recession is disappearing. We've got used to tariffs. We've got used to this trade war. We got used to these crazy posts, or sudden these twists and turns. We're now back down to basics. Let's look at the economic data. Let's look at the state of the economy. Let's look at hard facts. So basically, roll on June the 18th. That's when the Fed will obviously meet again and make their decision. I doubt they will cut rates in June, to be totally open with you. I think most bets, basically CME tool, reckons they like to cut maybe in September. So anyway, but still, that's going to be a big event. Expect the market to talk about it. Anyway, now that we've changed, we've gone back to basics and the market's gone back to looking at economic data. What's been the knock-on effect? Well, the knock-on effect, and we'll look at the market in a moment, has really been the dollar is sinking, and it's sinking badly. In fact, the euro dollar today is approaching a new 2025 high. The sterling is trading high. I mean, it's trading extremely high as well against the dollar. So we are looking at a weaker dollar because of this economic data, because the market's looking at, again, cooling inflation, slowing labor market, and they're seeing it more and more likely that the Fed will indeed cut interest rates, which will, of course, weaken the greenback. So anyway, let's have a quick look at the markets. Let's see how it's actually performing as we speak. Let's start off with, obviously, as we're talking about currencies, let's talk about the currencies first. Okay. So obviously, like I said, the euro dollar is currently trading just under, it actually went above 116 today. Okay. And that's like the highest level since November 2021. So the single currency is performing very well against the greenback. And as you currently see, it's slightly under now at the moment, currently trading at 115.86. The British pound as well, trading quite above 136 now. Again, actually, if I go back to the euro, I want to make a point. Okay, this was on the announcement of the PPI. Okay, and this was on the announcement, okay, of the CPI. So again, as you can see, the market is indeed, again, finally reacting to economic data, especially the currency market. Anyway, moving on to the cable, like I wanted to point out, again, same thing with the cable. That was when the CPI came out, and this is when the PPI came out. So as you can see, the currency market in particular is reacting to economic data. Like I say, currently trading just under 136, still performing very strong against the greenback. This is despite the fact that the UK GDP contracted negative 0.3% today. So despite that, it's still performing very well against the US dollar. Dollar yen, again, you can see under pressure, maybe a slight bounce back since it came under pressure. But again, this is when the CPI came out, and this is when the PPI came out. So as you can see, again, the currency market is reacting to economic data. But anyway, the dollar yen is under pressure, currently trading at 143. And the dollar index, 97 now, back down to 97. So we are seeing a weaker greenback across the board. Moving away from currencies, let's have a quick look at the market, and the market's reacted. Very tepid, very mild. Again, this is all, despite Trump's little tweet always posts on social truth, whatever. Like I say, a couple of months ago, the market would have gone wild for it. But now the market's ignoring it, currently still trading around 6,000 points, but sideways, very tepid, ignoring that statement done by Trump. NASDAQ is the same. The Dow actually only down by 72 points, but again, it's very sideways. Again, it's ignoring those posts made by Trump. If you look at the Mag 7, Tesla, okay, sideways as well. Meta, pretty sideways as well. Microsoft, I will do a special on Microsoft because I've got a very keen interest in Microsoft. I think potentially there is potential moves to this company in the future, and I will do a special where I will dissect it a little bit more about that. But like I say, sideways as well. Amazon, sideways. Alphabet, sideways. Nvidia, all the Mag 7 is pretty much very, very mild, very tepid. The one real mover in the stock market, which is moving, unfortunately for very, very, very tragic reasons which happened today, and my condolences and best wishes go to the family and friends. But Boeing is under a lot of pressure. It's actually down 8% in pre-market. And it's currently traded still negative 3.91%. As you can see, it opened low with that gap, and that's all because, like I say, with that tragic crash which happened in India. But anyway, again, condolences and wishes goes out to the family and friends. So Bitcoin as well, like I say, again, moving on, getting tepid 107, and of course, it wouldn't be one of my programs if obviously I didn't talk about one of my favorite assets, which is gold. Gold, again, once again, is benefiting from a weak US dollar, currently trading around $3,387 an ounce. If you look at the bigger picture, look on a daily as well, still very much it's got that uptrend. And yeah, like I say, still very much up. Again, but like I say, key resistance for me is still going to be around $3,444 an ounce. So we're still just about there. Okie dokie. Okie dokie. Don't forget, you can ask me questions anytime you like, or like I say, ideally, what I like to hear is your opinions, your thoughts on this. Has the market finally moved on from Trump and Trump's claims, his posts, and now are they going back to basics like it used to be, like the good old days? We're going back to economic data. Let me know your thoughts on that. As well as that, if you're watching me on YouTube, and of course you like this sort of thing, and you like this type of content, subscribe if you like, hit the notification button so next time we're going live. And if you sort of put up with me, my over-the-top enthusiasm for the markets, by all means, give me one of these. It's nice to know that you like what I do. As well as that, on another side note, if you're not part of the OneRoyal family and you wish to find out a bit more about us, if you go to the description below, there is a link. You can click on it and have a look at us. So that'd be, something worth looking at. On another matter, another thing as well, I remember, a lot of people I notice go back and watch the recordings, which is great. I appreciate the support in any way. And if you are watching the recordings and you do have a question or you have a point, put it in the comments below. I will see them and I will reply to that comment or that question next time I go live on air, which of course will be tomorrow as we go live almost every single day. Okie dokie. If there is no questions, not a problem. Leaves me to say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should I be taking as financial advice. So I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.